Hey YouTube, Mr. Angelo here, and today I just want to take some time to thank two of the people on YouTube who I have been viewing as mentors for a while and who have taught me so much about investing, trading, and the philosophies that lead to success. Dave Lee and Emmett Peppers have been a unbelievable inspiration to me thus far. Um, I was listening to their podcast today, and that's what gave me the idea to do this video. Dave Lee is a investor and YouTuber who puts out his perspectives on the market and has his friends on to discuss their investing success. And one of his friends who has been on the podcast many times is named Emmett Peppers. And these guys have laid out a philosophy of investing that has really resonated with me and has taught me so much about what is possible in stock market investing and personal finance in general. So I just want to say thanks so much. I was thinking about just going over some of the things Dave has taught me thus far. But first, I just want to say congrats to Dave Lee on his 231st episode of YouTube. You've really put a lot out there, and your consistency has been motivating. And also, congrats to Emmett Peppers on your trading success. It's been a remarkable story. And like you guys mentioned in the video today, if you weren't watching it play out, it'd almost be too good to be true, but it's not. And I think there's so many gems in your experience thus far. One of the major things that I've taken away from Dave's investing philosophies, there's many, but one of the big ones is that it is okay to form my own convictions around a company, and these convictions will likely be unique. It's tempting when getting into trading, at least for me, I've been investing in trading for a year now, to constantly be seeking validation from the professional community or the mainstream finance media. And I'm not sure what that is, if it's maybe some leftover status that the investment banks have, or maybe it's just so rare to meet people who have been very successful in finance as a retail investor that you're often caught up in looking and trying to mimic, I should say, looking at and trying to mimic the professional community. But after I discovered the retail community on YouTube, I realized that a lot of you guys are thinking for yourself. You're thinking independently. You're doing all the research and sharing ideas throughout the retail community on YouTube. And it taught me that the professional approach, if you want to call it that, or the kind of common ideas about diversification, ETF investing, mutual funds, etc., they're not necessarily the most appropriate for an individual in today's current climate. And once I opened my eyes to that, specific perspectives that they can use to get an edge in the markets. Um, that's actually what an edge is. An edge is your own unique perspectives and knowledge and outlook that the market as a whole is unable to see. And because you have these unique perspectives, you're able to take advantage of large opportunities that the majority of people in the marketplace are missing or unwilling to participate in because of their different levels of risk tolerance, etc. And so when you realize this, at least when I learned this from Dave, I became so excited because it's so fun to form a unique perspective, implement it in the markets through your investment decisions, and then see how close to reality you really are. And that's verified through the the success of the company or through the stock price. And Dave also taught me to aim high. Like it's interesting. It's almost like great investors think very differently from good investors. Dave has put out many videos talking about the uh, the effects that compounding has, and the potential paradigm shifting wealth that can come from finding a company that 10x's or 100x's in market cap. And it's funny because almost no one in my personal life has said anything like you can be the type of investor who holds Apple from an early stage or who holds Netflix or Facebook. Or there's this weird disconnect that seems to happen with people when they think about investing, and they think that aiming at 10% returns per year, 15%, that's like the intelligent thing to do when thinking about personal finance. Aiming at becoming a millionaire, no, like you shouldn't do that. It's much too risky. And I think all the greatest investors that we watch on YouTube now, Peter Lynch, Warren Buffett, and all these guys who have made huge fortunes, many of them say actually no, diversification is the ignorant thing to do, and a massive fortune can be made by only picking a few companies. And yeah, yeah, that's been a huge shift in my thinking. Another massive shift in thinking that Dave has really opened my eyes to is the idea that there are certain underlying principles that lead to massively successful companies in the stock market, the types of companies that, 10x or 100x. And you can start to learn about these principles, and you can start to see them in varying degrees across the different popular stocks or just across companies in general. Um, Dave's done a fantastic job of creating videos that explain these concepts in a way that a new investor can understand. And I just listed some of the ones that I think about almost every day in my own stock research. Beachhead strategies, winner take most. Peter Thiel's book 0 to 1 and the breakdown of the 7 criteria for a disruptive stock. Tesla's, this is supposed to say vertical integration videos, and just how much of an advantage that organizing a company in a certain way and controlling the supply chain, etc. Something I find fascinating is that the winner take most strategy is very similar to what Jordan Peterson talks about when he describes a Pareto distribution, and how the tendency for, maybe the top 20% of participants in a certain domain produce 80% of the results, and how that is found in the capital markets and the financial markets, but also in the, goals scored by NHL players and novels sold by the most popular artists. And it's funny, it's like the winner take most, or I think as you talk to Daniel Schreiber about, Dave, the bigger the fishbowl, the bigger the fish gets type of principle. Once you learn it, you start seeing it everywhere. And it's just such a valuable idea in terms of stock picking. Also, just the fact that I can watch you guys talk about these massive fluctuations in stock price and how you're thinking about, wealth and the big swings in wealth that come from stock picking. I've been experiencing that a little bit recently. as the numbers have compounded and grown, and it is difficult to detach yourself from huge gains or losses on the day-to-day basis. But I always think about what you said, Dave, when you said that, if you got in early, who cares if it swings around up there? Don't panic and sell too early. If you believe in the company long term, hold for the long term, and don't let the noise of the market distract you. Kind of like, yeah, if you had someone telling you what they buy your house for each and every second of the day, it would be distracting, and it's difficult to escape from. Also, the idea that you can hack investing. I know that Dave has spoken about having real estate that pays for his expenses, and if you can have a high salary, then you're likely going to be in a good financial position for a long time. You can take more and more risk in the market, or go for more and more ambitious companies and maybe more risky positions. And it's so true. Like, we have this fear of losing money, and this attachment to money. But if you have your financial situation organized in a way that allows you to have a certain amount that you're going to invest in and attempt to like change the paradigm of your wealth through like this doubling compounding effect, it's perfectly fine. It increases the probability that it's going to happen massively, having a strong financial base. And I've definitely been implementing some of those ideas in my own life. And another thing, if you have a high conviction in a company and you've done all your research due diligence and you can't figure out where it is that you're wrong, and you see the opportunity clearly, I know for myself, I go for a walk every day with no distractions, and I just let my thoughts run, and I really try to analyze where I'm wrong or what I'm not thinking about, and how that can produce an unexpected result. And of course, I'm not perfect. I don't think anyone is, but I've found myself in the situation where I think I found an opportunity, and I don't know how much exactly to risk, but something Dave said, which is, if you get an opportunity, it's like what Warren Buffett says about getting pitches. You only have to swing at a few of them. But if you swing, make sure you hit a home run. Swing for the fences when you have a fantastic opportunity, and just no regrets about it. And that really helped me make a couple decisions that were maybe a bit bigger, slightly out of my comfort zone, not in any super risky way, but just as the numbers get bigger, that's really changed my perspective. And also just your consistency, Dave, and how you build out your content um, and your social media. It's been pretty inspiring to watch. So thank you very much for all that you've taught me so far. And I certainly nowhere near what you're probably going to teach me over the long term, but you've made a massive impact on my thinking and my life, and I can't express to you how grateful I am. Emmett's taught me a lot as well. And Emmett's perspective deeply resonates with me because I used to play online poker obsessively. I would play on Poker Stars probably 5 or 6 years ago. I ended up 18xing my initial deposit before I realized that maybe I should go pursue a profession that wasn't so isolating, or something that maybe had slightly more impact than playing online poker. I love poker, but it was a difficult way to earn money. But I feel like Emmett's perspective in the market has a lot of similar principles to the type that are implemented by poker players. I know that Emmett does a lot of like expected value betting, let's say, or betting with an edge. I know on that Tesla call play you mentioned, you might think you have a 20% chance of hitting it, but if you can get a 20x return, it'd be inappropriate to not take that bet. And I completely agree with you. If you think you have a huge edge, like a 20x or nothing on a 20% equity play, that is such a good bet that it'd be irresponsible not to take. And the fact that you're making these bets and putting them out to the public and showing people what's possible with options and with, approaching the market in this equity focused, principle focused, kind of upside versus downside risk reward focused way has been very eye opening. And I have done a little bit of options as well and done well on them so far. And I don't know if I would have had the confidence to start experimenting if it wasn't for you talking about your plays with Dave. Also, just like you can make 30 million in a year, or you probably made more than that, Emmett, but 30, 40 million in a year just by keeping it simple, just buying common shares, buying long dated leaps, not trying to get fancy, not trying to put spreads and call spreads and iron condors, just keeping it parsimonious, keeping it simple, making sound bets by thinking in probabilities, and the results will follow, and being courageous enough to put down um, a huge sum of money in dollar perspectives, but also keeping the ability to think about it in terms of percent of your portfolio and understanding that a 5% risk of your portfolio is not that huge of a risk when you consider the upside potential. That's been really inspiring. A lot of people, I think, would shy away from those type of large numbers, but you have really stuck with the game. Let's say you've it's like you're playing poker at very high stakes, and your game and your strategy has not changed at all. And it's commendable, and I've learned a lot from watching you. Also, I think something you said previously, Emmett, that really resonated with me was that you feel like you're good at leveraging the intelligence of the internet. You can find the smartest person in the room, and you can just learn from them and let them speak and take the principles that they put forth and utilize them. And I've been really thinking about this too. Now the room is everyone who creates content. And the smartest in the room is very, very, very smart. And so if you just have the ability to figure out who the smartest in the room is and emulate them and block out the noise of all the other people who are putting out opinions that are stupid, you're able to you can almost have like a team of the smartest people on every topic informing your decisions. And it's a pretty remarkable opportunity that presents people like myself and from you guys, and it sounds like also for you guys. And the network effect of it is pretty remarkable when you think about just how cross-pollinated these ideas can become and how refined some ideas can become through this type of like consistent dialogue through YouTube or online on Twitter. And it's a pretty amazing idea. Hopefully one day I'll be able to um, provide something of value for someone in the way that you guys have provided me value, and it's been very inspiring. Thank you so much for putting out your content. Thank you for the podcasts, the principles, and just kind of showing younger investors like myself and many others, I'm sure, that you can be successful if you're disciplined about it. You can be a unique independent thinker and produce fantastic results in the market. Of course, anything can happen, but I think that what you guys have taught me so far will it already has changed my financial life and the life of my family, but I'm sure the lessons will continue to provide countless life-changing, um, countless life-changing lessons for so many of us on the internet. So I can't thank you guys enough. You're true inspirations, and the amount of online mentorship you've given me is really quite staggering. I'm grateful to the bottom of my heart, and yeah, I'm excited to see how 2021 plays out. Take care.